Okay, I'll get started. Now there's a few people on. So I'm just beginning to share my screen play from the beginning. So my name's Sophie. I am the director of Sophie Grace Compliance and Legal. So we're a business which specialises in ASIC regulation and AUSTRAC regulation for Australia. So we help people with obtaining and then maintaining their Australian Financial Services licence, so an AFSL, and an Australian Credit Licence, which is an ACL. So today we're going to talk about whether you need to obtain an AFSL or ACL for a FinTech business, since we're doing this collaboration with FinTech Australia. Given there's a manageable number of people online, I'm very happy to take questions if you want to do the raise hand function during the presentation, or type FAQs as we go along, and I'll endeavour to answer them so that hopefully it covers the questions that you have. So moving to the next slide, so you'll see there we've attempted to break it up over a series of seminars. So the next one would be next week, which is how do I get an AFSL or ACL. So we'll go through the procedural nature of the application that needs to be made to ASIC. The following one will be whether you need to be registered with AUSTRAC, which is the AML-CTF regulator that deals with money laundering. And then the fourth week, we'll cover how to maintain compliance with your ASIC and AUSTRAC requirements if you are registered or licensed by either of those regulators. Okay, so who is required to have an AFSL? So that's the Financial Services Licence issued by ASIC. The short answer is if you conduct a business in Australia, and that's a key point which we'll look at a little bit more closely, providing financial services and or a financial product to clients, you will be caught by the Australian Financial Services Licence regime. So we'll look at those individual components in turn over the next few slides. If you do have any questions, as I said, just raise your hand. So when you're licensed, based on what we said in the previous slide, which is to provide financial services and financial products, a financial services license is issued by ASIC, and it can have a different combination of authorizations. So it's not as simple as a one-size-fits-all AFSL. Everybody has a slightly different AFSL depending on what type of business that you operate. So moving on to the first component, which is whether you're providing financial services in Australia, there's a very good regulatory guide which we'd suggest you have a look at if you're not sure whether you meet the jurisdictional requirements of being in Australia, or you're looking at a particular carve-out. So that regulatory guide there is Regulatory Guide 121, and it's good for people who are operating businesses from outside Australia or that aren't particularly targeting Australians. So you'll see there some of the reasons why you would get caught within the net of having a financial services license is if you have a place of business in Australia. So that's literally if you're sitting in Australia as a country, or you're sitting in the territorial waters, you are very likely to be picked up by the financial services regime. The other possibility is that you're sitting outside of Australia, but you're administering, managing, or otherwise dealing with property that's situated in Australia. And the third factor which you need to consider is the system, regularity and continuity of which you're carrying out the particular financial products or services business. So you'll see there is potential for carve-outs for a one-off transaction, but even a one-off transaction could be could be picked up if it's substantial. And that's a common law test. So it means that it's not as black and white as some other regulations are. The courts and ASIC will look at a variety of different factors to determine whether you're picked up. The second point there, in relation to whether you're picked up in the financial services regime, is whether you're potentially sitting outside of Australia, but you're carrying on conduct which is intended to induce people in Australia to use the financial services or products you provide. So that's a particularly interesting one because of the way the internet operates now. So we do see, and if you look at the ASIC media releases, you will see that ASIC does make comment and does take action against people who are using the internet to specifically target Australians. And that's something that over time, I think there'll be more specific guidance released. However, you are within the realms of possibility of being picked up in Australia if you have your website available to Australians, or specifically using Google AdWords or banner ads to target Australians. And the same is going to work on an inverse way. So if you're sitting in Australia targeting people from outside Australia in a specific country, you might draw the attention of an overseas regulator. Okay, so financial services. So that's the first limb of assessing whether you need to have a financial services license. So the financial services are broken up into those 6 different bullet points. So the first one is providing financial advice. The second is if you're dealing in a financial product. Third is if you're making a market in a financial product. Fourth, operating a registered or unregistered managed investment scheme. Fifth is providing a custodial or depository service. And the sixth is a relatively recent one, which picks up a lot of fintechs, is the crowdfunding service. So I'll go through those in turn. So dealing services, there's some good reading in Regulatory Guide 36 about the definitions of dealing services. And you can see there that's broken down again into a few different categories. So first one is applying or acquiring for a financial product on behalf of another. So the classic example there would be a financial planner who is helping their clients by giving them advice, first of all, but second of all, helping them to acquire shares, interests in managed funds, which comes under managed investment schemes. The second one there, issuing a financial product. So that is commonly in relation to businesses where they're creating a financial product and they're giving it to their clients. So a bank account is the issuance of a deposit product by a bank. Another example would be a stockbroker that is issuing a new set of shares to put a company and make them listed on the stock exchange. So they're involved in the issuing of a securities product. Underwriting a security is a security or a managed investment scheme is another function where you're picked up. And then you've got varying and disposing of a financial product. So that's really as simple as helping a client to change the nature of the financial product that they have, or helping them to sell it. Arranging services, again, are covered by RG 36, and I won't go through them too closely because, as I mentioned, the classic example there is a financial planner, but you can draw inferences out to other types of businesses where you're helping people to obtain or change a financial product. Making a market, again, is quite a technical one. A lot of fintechs don't get picked up by this, but this is where you're regularly stating a price at which somebody can acquire or dispose of a financial product on their own behalf. So we deal with a lot of companies that have trading platforms, not trading platforms for securities, because you'll see in the lower dot points there that they're specifically carved out. But you could be offering contracts for difference, is a classic one, margin foreign exchange, or other products which they call over-the-counter financial products on a financial platform fall under the maker market. Providing custodial services. This is a service which is very common in relation to managed investment schemes, but it can be used for securities as well. You'll see there it's where you're holding a financial product on behalf of somebody else. So think of that in a sense that if you have a share account with CommSec, I have one in my personal name, so I can access, and I'm holding those shares in my own name. However, there are instances where there might be a financial product provider who is holding my my shares for whatever reason in their account, and that's where the custodian authorizations come in. So that covers the financial services. Then we move on to what is a financial product. So if you're providing a financial service, you're going to be providing it in relation to a series of financial products. So you'll see there's a list: deposit products, quite a simple one, is your classic bank account, savings account, term deposit. Non-cash payment products is one which is becoming very popular with many fintechs these days that are involved in sort of e-wallets and online payment platforms where you're holding money in some sort of account that's not a bank account. Government debentures, that's your classic government bond, not very common with fintechs. Life products is your life insurance and risk, a life risk. And general insurance is your car insurance, home insurance, any other insurance product that you have, which is issued by an insurance issuer. Derivatives is another one. So that's where it's an arrangement which, as it says there, required to provide at some future time consideration of a particular kind to someone, and that the arrangement is priced based on some underlying asset. So you can see there's some examples. So we've got an asset, an interest rate, an exchange rate, an index, or a commodity. They're very technical products. And then you'll see there the third point is that it's where there's not something deliverable at the end of the contract. So gold, commodities, they're often traded as derivatives because people don't want 50 tons of wheat turning up at their office at the end. They just want to have the difference in the price. Foreign exchange contracts, that's a simple one that most people would be familiar with. So buying or selling currency between two currency pairs. And the last one there is one which we'll probably talk about a bit more as it goes along, which is the, very, very sensitive system here, managed investment schemes. So it can be a unit trust, a fund, or some other scheme or arrangement where investors purchase units in the trust or the scheme, and then their funds are pooled together to invest in other assets. And then investors receive a return, which is then calculated based on the proportion that you originally contributed to that scheme. Managed discretionary accounts is another one where many fintechs are picked up. So that's a facility where you make a contribution and then it's managed by a financial provider or a fintech business on an individual basis rather than a pooled basis. So your return is based on what happens in your pool of assets only. It's not impacted by other people in the pooling, where it is in a managed investment scheme. You'll see there also the MDA operator has discretion as to how to manage the investment. So that's been something that's been particularly popular with financial planners over the years, but there's lots of people who have now started businesses where they're offering clients to keep assets in their own name rather than in the name of a managed investment scheme. And then they've got good visibility over their investments. And then they also get the returns without being impacted by who else is in the scheme or worried about that. Securities, those are quite well known to most people. So it's your shares, your classic shares in a company that's listed on the stock exchange or not listed on the stock exchange. Debentures, bonds and notes are also considered a type of security under the Corporations Act. Standard margin lending was something that was very popular before the GFC, and that's slowed down. So that's where you borrow. I'm going to have to stop clicking this too much. Standard margin lending, where you borrow money to invest and use to buy shares or managed funds. Anyone who's been around that long will know that standard margin lending facilities got a lot of people into trouble at the GFC, so have become a lot less popular. And then retirement savings accounts are something that the government introduced, which is quite similar to a standard bank account, but has some specific provisions around fees and charges. So once you've worked out whether you are providing any of those particular financial products or services, you then need to work out who you're providing them to. So there's two types of clients under the Corporations Act. The first is retail clients, and as you'll see there, it's in 761G of the Corporations Act, and the products and services are automatically assumed to be provided to a retail client unless that client can be classified as a wholesale client. So you'll see there in the last bullet point, the most common criteria that most people are aware of is to become a wholesale client, you need to have net assets of $2.5 million or more, or gross income of $250,000 for each of the last 2 financial years. And you would need to have received from that client an accountant certificate attesting to that person meeting either of those 2 requirements. The alternative that's also quite common is where the price of the product or the value of the product that's being invested in is over $500,000, and then you can automatically assume that that client is a wholesale client. Just stop there and check for any questions. No questions at this stage, but feel free to pop them in if you have any. Oh, are you? There is a question that you've written back to. Sorry. Okay. All right. Financial product advice. So I'm going to talk through the different types of financial product advice because that's something which is important when obtaining licensing and when dealing with clients and setting up your business, because the different types of advice have different obligations on them. So a good place to start again is RG36, but also RG175. So financial product advice, as you'll see there, this is the Corporations Act definition in section 766B, is if you make a recommendation or statement of opinion or a report which covers either of those things, which is intended to influence a person in making a decision in relation to a particular financial product or obtaining an interest in a product, and could reasonably be regarded as being intended to have that influence. This second bullet point is something which is starting over time to pick up more and more people and become subject to a bit more ASIC scrutiny and court enforcement, because the reasonable person test is quite a broad one. So you'll see here we've split out the different types of financial product advice. So you'll see first up there, we sort of call it the overhead category of any correspondence or communication from an AFSL holder to their clients. So it's split into two categories. Factual information on the right there is not picked up by any licensing provisions if you provide factual information only. On the left there, we've got financial product advice, which is split into two. It's split into general advice and personal advice. So factual information versus advice, and this is one which is tricky, and we would tend to say, for the most part, if you're asking this question or thinking about it, you're probably at the point where you do need to be licensed. So factual information is objectively ascertainable information whose truth or accuracy cannot be reasonably questioned. So information that's in the public domain, facts, figures, nothing that's particularly comparative or substantive tends to be easily picked up. Then we move on to personal advice. So personal advice is financial product advice that's given or directed to a person where the provider has considered the person's objectives, financial situations or needs, or a reasonable person might expect the provider to have considered one or more of those things. So that's quite a broad statement, and it picks up quite a broad number of things and ways of interacting with clients. And the difficulty now is that the courts are taking that at this point to the nth degree. So as soon as you've got people on the phone to clients or chatting with clients and they know things about their clients, how many kids they've got, whether they're planning on taking a holiday, whether they've got a mortgage, those things all of a sudden, the courts and ASIC are interpreting that as being things where a reasonable person talking to someone that's providing financial advice would assume that they've taken that into account when they're corresponding or communicating with them. And so then anything that's left, if nobody's considered any of the financial circumstances of the client, is considered general advice. So that really picks up written statements which aren't otherwise covered as factual information. For example, their US dollar is trading in the region of $1.30 to $1.50. Those were good times. It's not doing that now. And payroll results recommending clients purchase the USD. So it's a very basic statement. It's not loaded or considering anybody's personal situation because it's just written and it's mass communicated to people. I won't do that. So what I'll do is I'll just pause there and I'm going to switch my screen to a slightly different share and just show you some examples of financial services licenses so you can see how it looks on the AFSL register. So the way to do that is going to the ASIC website. And the way to get to the professional registers, which cover AFSL and ACL, is to go here onto professional registers, type in an example. So what I'm going to do is type in the Commonwealth Bank, and we can see what they've got. They have a number of financial services licenses. So I'm looking in the financial services licensee register. So this looks like their original one, Commonwealth Bank of Australia. Okay, all right. Commonwealth Bank gives us some details about their licensing, when they got the license, whether it's current and what their license number is. And we go down here to their authorizations. So you'll see they have quite a long license. So going back to the terms that we talked about before, so authorizes provision of financial services, and the first section is around financial product advice for following classes of financial products. So that's the service that they're providing, and you'll see there they can give advice in all of these financial products here. So most of the financial products that we mentioned are covered. The second section covers their dealing and then the specific types of dealing. So the first one here you'll see is that they've got issuing financial products, and they can issue quite a number of different financial products, which is not surprising given they're a bank. So they're issuing basic deposit products, they're issuing non-cash payment products, they're issuing insurance, they're issuing foreign exchange contracts. Again, that's where you're sending money overseas, life products as well, and securities. So not surprising. And the next category is the applying for, which would cover their financial planning arm and their advisory arm. So again, a lot of products. They've got underwriting and issue of securities. They can make a market in quite a number of products there, and they've got custodial services. And they are providing that to retail and wholesale clients. So that's the standard format of an AFSL, and it gives you a lot of information about a business and how they're operating and what they're authorised to do. So that's the financial services regime. I'll check if there's any questions on that before we move on. Okay, there's one there. So Harpreet has asked about whether there's a requirement to have an AFSL for cross-border payments. So the interesting thing about that is that there's cross-border payments is a business which picks up both AUSTRAC and AFSL registration, but there are some exemptions from having AFSL registration if you're not operating a payment wallet as well. So we can send you the particular authorizations, but the financial product that's involved, which is foreign exchange, I'll go back to it just to show you. Spot payments and spot conversions are not considered a foreign exchange product. So even though this is here, which is the basic definition, what's carved out is a conversion which is done on a street teller. So the ones you see in shopping centres where they're converting cash immediately are not considered a financial product. So what's picked up by that definition of foreign exchange is forward and option contracts primarily, or contracts that are derivatives which are based on a foreign exchange contract. Okay. Oh, sorry. I'm going to change this back to the other one. All right, moving on to credit licensing. So credit licensing is, again, regulated and monitored by ASIC, the Australian Securities and Investments Commission. So there's a range of businesses which are picked up by the credit licensing regime and therefore require an Australian credit license. So some examples there: credit providers, people providing leases, for consumer goods or other products are picked up. Finance brokers, so people who are helping people to obtain credit, and mortgage managers or aggregators. So again, people who are helping customers to obtain home loans or other types of mortgages. So a credit contract, the first question is to look at whether the credit contracts are picked up by the National Credit Code. So the ones that are picked up are consumer loans. If you're providing non-consumer loans, then you don't have to have a credit license. So things that aren't considered consumer loans are development development loans, most types of business loans, investment property loans. So what is in scope is what's remaining. So it's a loan that's given to an individual, personal loans, credit cards, small amount credit contracts, so payday loans of up to $2,000, medium size loans, $2,000 to $5,000, home loans, car loans we haven't talked about, but yeah, anything that's given to a person is most likely to be picked up by the credit code and therefore coming under the credit licensing regime. So consumer leases, I won't talk too much about, but that's a contract for hiring of goods by a natural person or a strata corporation, where you don't have a right to or an obligation to purchase the goods at the end of the lease. So you'll see there some of the provisions around what a consumer lease is picked up by, again, personal, domestic or household purposes. Fees and charges must exceed the cash price of the goods, and the lessor must hire out the goods as part of a business that they're carrying on in Australia. The credit contract, oh no, that's gone the wrong way. Credit services, so this is where, again, the credit licensing is split out into two different types of categories. First is being a credit provider, so that in basic terms means you're the person who's lending the money or giving the money for the goods that are being leased. And the second category is credit assistant provider. So credit provider, as I said, is the person who's lending out the money, being the loan issuer, or the issuer of the lease of the consumer goods. Credit assistant provider is dealing directly with the consumer about assisting them with a loan product. So, for example, you'll see there helping people apply for a credit contract or a lease, helping them increase the price or the value of their credit contract, or assisting them with those processes. There's used to be quite a number of different carve-outs from this regime, especially with recommendations and referrals to credit providers, for example, with real estate agents and other businesses where customers generally need to obtain some sort of loan. Those carve-outs have been really reduced. So if you're doing any form of activity that has any referencing or assisting people with credit contracts, you're very likely to be picked up because the carve-outs are now so limited for that. Even just sending a client to a loan provider is most likely picked up by the regime. So I'll stop there because that covers the credit licensing, and just see if anybody has any particular questions that they want to ask. Okay. Again, I'll just switch to the other screen and show you how it looks on the ASIC website, in case you want to look up any businesses. So we'll go back to ASIC, go to professional registers. Again, we'll type in Commonwealth Bank, and this time we'll click on the credit licensee register. Okay, Commonwealth Bank of Australia, you'll see there their license number, the ABN. They've had their credit license for some time. And we can see here, in fact, this Commonwealth Bank license only has engaging in credit activities as a credit provider. They don't have arranging credit on their license. They may have in the past, which is why, nope, they didn't have it in the past. So for someone who's arranging, it will read differently, or it's possible for many credit businesses to have both credit provider as well as credit arranging authorizations on it. Okay, I'll switch back. Okay, so I'm going to talk through the licensing of a couple of fintech businesses which are well known, and I'm going to give you some tips as well as to how to do some sort of sleuth work to work out what sort of licensing businesses have, which helps point you in the right direction. Feel free, if there's any particular business that you'd like me to cover and talk about, to pop it in the Q&A, and I'll attempt to do that as we go along. So the first one here is some of our big success stories in Australia, so Afterpay and Zip Money. Afterpay has a credit license. However, most of their financial products aren't actually covered by the credit licensing regime. So they're working off a particular exemption in the National Credit Code, which exempts them from having a credit license because they're not actually charging interest. So many of the compliance obligations that credit licensees have, including their responsible lending provisions, don't apply to them because they're operating in this carve-out. I'm sure many of you have read that carve-out is under review, so we'll see what happens. BrickX is an interesting one. So BrickX is a fractional property platform. So they are running a managed investment scheme. What I'll do again is flick here because I've pulled up their website. And I'm going to show you a good way to have a look at what BrickX is doing. So generally what we suggest, and a good place to start, is to go down and read their disclaimer. So you'll see hidden in there, it's not hidden, they're running a managed investment scheme, and you can see the number here, ARSN. BrickX platform is a registered scheme number. So they're running a retail scheme which has a product disclosure statement which gives people details about that managed investment scheme. And each person, as you would expect, they're buying a fraction of a property, which you'll see here. They choose your property, buy a brick in a property. They're using the term brick as another term for a unit or an interest in a managed investment scheme. And then people are earning a net rental income per brick. Again, they're getting a return on the investment in their managed investment scheme. So each of these properties that they've got here, the cost to buy into one brick in this property is $72 or thereabouts, and that will buy you one piece of the managed investment scheme, or one unit in the managed investment scheme, and then you'll get a return as outlined there. So you'll see here BrickX products are issued by BrickX Financial Services Limited. So if we go back up to our register, you'll start to see some of this come to light. So type in BrickX, search the financial services licensing, and see what they've got. So you'll see this is what we talked about before. So interest in managed investment schemes, and they're operating a registered managed investment scheme, which, as I mentioned before, is called the BrickX platform scheme, which invests, as it says here, in direct real property. So no surprises there. And some of these other authorizations here, such as applying for general insurance products. The reason why you would see that general insurance products on there is because they're no doubt insuring the properties that are contained in the managed investment scheme. So they're issuing managed investment schemes, but then the managed investment scheme is applying for general insurance products, and they're applying for interest in managed investment schemes as well. So that's BrickX. Check for any questions. Any questions? Okay. Okay. Swap screens again. The next one I'll talk you through is micro investing. So Raise is another business which has done very well. So it's where people invest small amounts of money and then they're able to get exposure to the share market. So they have a very sophisticated looking platform which looks very nice. It makes it easy for people to invest quite small amounts, and that's overlaid with some of these other functionalities such as roundups, lump sums, and some of the promotions that they do with retail businesses to help people earn small amounts of extra money. But as most people would know, to buy into an ETF on the stock market isn't so simple. So what they're doing is they've built this system around the managed investment scheme system. So I'll take you across to their website and show you through again how we would have a look at that. So Raise, here we go, that's their system, looks pretty good. We go down to their disclaimer and it tells us a bit about their licensing. So Raise Investment Australia is their entity, which is an authorised representative. And again here they've got a Raise Investment Australia fund, which is issued by, in this instance, not by themselves, but by a company called In Street Investment Limited. So if we go and have a look at their license. Let me check how that is spelled. So the authorised representative of AFSL, this number. So let's see what that number pops up if we pop that number in there. So we'll see who it is and what's going on. So In Street Investment, George Lucas, who is well known in the fintech space, and we'll have a look at what they've got here. They've got authorizations, so it looks like there's a lot of reference here to most of the same license 434776, and it's there again. So we go and have a look. We see they're operating a registered managed investment scheme called Raise Invest Funds, as it says in the disclaimer, and their scheme, instead of BrickX, which has direct real property, they've got financial assets. So that allows Raise to invest in anything which is a financial asset. In their instance, my understanding is that they mostly invest in ETFs of various securities. And you'll see here they've got a license to provide financial product advice in a lot of financial products. And they've got dealing in financial products by issuing and applying, again, in an array of financial products, but mostly ones that you'd expect, such as their own managed investment scheme, securities, foreign exchange contracts, and derivatives, which, looking at their business, is not surprising. Okay. All right. Moving on to some other examples. Crowdsourced funding, so that became its own type of license. So that allows small businesses to obtain do a capital raising kind of process for specific types of businesses which have been defined by the Corporations Act now. So again, they've obtained their own type of license, which has been approved by ASIC, and there's a few of those in Australia, where you'll see that they've got an online platform. A company offers their shares using a crowdsourced funding offer document which meets the specific requirements, and they've got investors on the other side coming into the platform and investing money in exchange for shares. And you'll see there that the crowdsourced funding platform is the business which sits in the middle as intermediary and is helping facilitate that share and capital raising. Robo-advice. So that's another type of business which is creating automated advice for people. Most of the authorisations on the front end of robo-advice relate to the provision of financial product advice. However, much of the monetisation on the back of many of the robo-advice platforms is around the dealing and issuing of products and helping people do the purchasing on the back end. Marketplace lending is something that's been quite common, so I'll do a bit more focusing on this particular one. So we have a look here at that there's lots of different ways it can be put together, but you'll see there's a platform where people are operating and offering whether that they want to invest or that they want to borrow money. So you'll see there can be people borrowing. They put the details of what they want to borrow on the platform, and then the platform sits in the middle making loan and interest repayments. On the other side, you've got investors who want to invest money, so they can do it straight through to through the platform. There's different ways that this can be put together. Many of them end up involving a managed investment scheme in the same way that BrickX and Raise operating managed investment schemes. So it's where people are pooling their investment and it's unitized, and then it can be broken up into specific subcategories similar to the way BrickX is. So it's one managed investment scheme with lots of what they call sub schemes to pick up particular properties. So in that same way, people can be investing in one particular loan that sits underneath the managed investment scheme and obtain returns based on that. So that's the most common way. There are, of course, particular possibilities that some of these loans will be picked up by the credit licensing regime. So you might end up with a business that ends up with both an Australian financial services regime as well as a credit licensing regime requirement. Cryptocurrency is another very popular fintech business, and crypto and blockchain, which we talk about there. So those businesses dealing with cryptocurrencies. Cryptocurrency, in fact, is not considered a financial product under the Corporations Act. So many of the businesses operating in this space are not actually picked up by the AFSL or ACL regime. They're picked up by AUSTRAC registration, which we'll talk about at a later seminar. So that's something to keep in mind, and especially when dealing with blockchain. At this point, we haven't seen much movement towards cryptocurrency being picked up by any of the global regulators as a financial product. It's still sitting outside the boundaries of financial product licensing in most of the major jurisdictions. Payment platforms. So that, as I mentioned before, is another very popular fintech business that people are moving into. So you'll see there the standard type of business is where a payer has a currency wallet, whether in multiple currencies or one currency. And there's a merchant sitting in between, obtaining the funds in whichever currency and paying those out, whether to merchants or it can also be just peer-to-peer payments as well. So those types of businesses are picked up in the financial services licensing regime. As I mentioned before, they're considered non-cash payment products. So you'll become the issuer of a non-cash payment product, and you're helping people to obtain that. There can be a foreign exchange contract overlay on that. It will depend on the exact nature of how the foreign exchange elements of that business work. So I will show you one or two examples so that you can see how that looks on the ASIC website. And this is one that we obtained recently. So you'll see here they've got the advice in non-cash payment products, derivatives, and foreign exchange, but they're also issuing deposit products and non-cash payment products, which is their e-wallet. The make a market component, because they've got the foreign exchange and derivatives component, will be in relation to helping people to obtain those foreign exchange contracts, and they're involved in the issuance of those. Okay, so another question that we've got here is the cost of obtaining a credit license or a financial services license. So it depends on a few factors, which I hate to say, given the time, we'll probably go through next week, but it will, the functionality is based on what products and services you're going to have on your license and the number of people that are going to be involved. So our pricing, the way we do it, is that there's some authorizations which are much more complicated than others. So advice and dealing for your standard sort of financial planning kind of business or a basic robo-advice business will be closer to the $10,000 mark. Once you start adding things like market making, issuing of financial products such as non-cash payment products, custodial or managed investment scheme, those are authorizations which cost a lot more because they're harder to obtain. ASIC ask a lot more questions and do a lot more diligence in the application process. So those can be anywhere between $30,000 and $60,000 depending on what sort of authorizations you've got and the number of people that you're going to put forward to ASIC as the applicant. Okay, so that concludes what I wanted to cover in there. The downsides to getting a AFSL or credit license for a fintech is a question that I've just been asked. So are there any downsides to getting an AFSL or credit license? So yes, I mean, interacting with ASIC and being licensed by ASIC is not a simple process. However, I would say the upside to getting an AFSL or ACL is that you won't be prosecuted for breaching Australian laws by providing services unlicensed. So that's the upside of getting one, and the downside is that you're suddenly covered by a whole bunch of rules and obligations, auditing, compliance, training, breaches, all sorts of things which we'll cover in seminar 4. And that's difficult. You have a lot more scrutiny, but unfortunately, yeah, it's the cost of doing business and the cost of staying out of jail and staying out of the media, because yeah, getting in trouble is a good way to kill your business pretty quickly. Okay, in the absence of any other questions coming through on the Q&A, I'll wrap it up there. Hopefully see some of you next week. If you do have any questions that you want to email or send through. We've got a live chat on our website as well, so happy to answer any questions there, or send them through to Rayhan, and he can forward